the price of gold is going to go way up, and then it'll just get pegged at a certain level. Silver will go way up and it'll blast. As far as the returns, percentage-wise, is probably going to outstrip gold by at least a factor of 4, but it will go into a bubble phase. And if it isn't part of the monetary system, however, there are countries buying silver for their central banks are buying silver. And so it looks like it could be remonetized too. The Fed is trapped. We are really in the end game of a monetary reset. Hey, it's Mike Maloney and Alan Hibbard once again with the Gold Silver Show. Alan, how are you doing?
I'm great, Mike. Thanks. So let's start here with a tweet from Eric Young. He says, I think Putin and Russia just officially declared that they won't fall for the U.S. digital fairy dust fraud. I imagine the BRICS will soon follow. So what is he talking about? He's basically talking about a Russian advisor who is warning the world that the U.S. is trying to exploit the world, basically. So here's what he said. Let me read a bit of what was translated here, saying the U.S. has devised a crypto scheme to erase its massive debt at the world's expense. Mm-hmm. The U.S. is now trying to rewrite the rules of the gold and cryptocurrency markets. Remember the size of their debt, $35 trillion. These two sectors, crypto and gold, are essentially alternatives to the traditional global currency system. Washington's actions in this area clearly highlight one of its main goals, to urgently address the declining trust in the dollar. Yes. And just as you mentioned, Mike, as in the 1930s and 1970s, the U.S. plans to solve its financial problems at the world's expense, this time by pushing everyone into the crypto cloud. So once everyone gets in, Washington will devalue that debt. So what do you think, Mike? Is this plausible?
No. The debt is getting devalued anyway because the mathematics of fiat currency creation dictate that fiat currency always has to lose value. The currency supply always has to be diluted or the whole system collapses. But the Fed they are painted into a corner. They are in a trap. If they decided to move everything to a central bank digital currency or the stable coins, and then they were going to devalue the dollar, what does that do? They're basically devaluing treasuries. When the public and other countries, investors, see that the dollar is being devalued, the purchasing power is falling, they demand higher interest rates. Higher interest rates cause the refinancing of our national debt, that $35 trillion, to go through the roof. It would be astronomical. I mean, if they did devalue it to the point where they could wipe out this debt, the cost of refinancing the debt, all the treasuries have a time component to them, and they mature one day, and they're basically paid off, and they're extinguished, they're gone. And so unless we've got enough tax coming in and our expenditures are way below our income, we can't let that happen. And we just passed the big bad boondoggle, or whatever I was calling it, this bill what is the deficit spending going to annually right now?
$2 trillion?
Yeah, $2 trillion that we are going to spend more than our income. And so we have to not only roll over and refinance the current treasuries that are maturing, but we have to add that many annually. And the cost of the interest on those, if we're devaluing the dollar too fast, investors nobody will buy these things. Not even the issuers of stable coins are going to want to be touching these things. And it'll cause countries around the world to dump their treasuries, causing the interest rate to go even higher. And so you can't extract that much tax out of the population to keep the game going. The Fed is trapped. We are really in the end game of a monetary reset. And, he mentions gold there in the middle of this, but then turns toward stablecoins and crypto. I think gold is the answer. Gold and silver is a leverage to gold. Now, gold, if we go back onto a gold-based monetary system, the price of gold is going to go way up, and then it'll just get pegged at a certain level. Silver will go way up, and it'll blast as far as the returns, percentage-wise, is probably going to outstrip gold by at least a factor of 4, but it will go into a bubble phase. And if it isn't part of the monetary system, however, there are countries buying silver for their central banks are buying silver. And so it looks like it could be remonetized too. But gold would go up and hit a plateau. Silver would go up and then come back down. But when it goes up and peaks, it's going to be many times the performance of gold. In my opinion, I don't encourage anybody to follow this without researching it yourself and making your own decisions. Get some other financial advice. Don't rely on anything that we say. But what I'm doing is I bought a lot of gold, but when I bought whenever the gold silver ratio was high, I buy silver. With the gold silver ratio where it is right now, I'm still buying silver, not gold. And I will change at certain ratios. I will be changing some of that silver into gold. And then depending on whether I think the dollar is toast or not, I may be changing some of the gold and silver into dollars directly and buying real estate or investing in my farm, stuff like that.
Yeah, beautiful.
Yeah.
So the way I think about all this stuff, and basically, could a stable coin or a treasury, rescue the dollar or not? I've been thinking about money in terms of its layers. So here I have layers 1, 2, 3, 4. And this, by the way, is a graphic from my upcoming series, Hidden Secrets of Value, which of course was inspired by your series, Mike, Hidden Secrets of Money. Mm-hmm. So this episode here is called Designing the Perfect Money, where I basically pose the question, could we design a perfect money? Might it be gold, or could we improve upon gold? And if so, how would we do that? And the way I think about the different pieces of the monetary system is that gold is money, everything else is credit. And you can see it in this kind of graphic. So if you swipe a credit card, that's a promise to pay bank deposits. And a bank deposit is a promise.
But when you swipe the credit card, you're creating bank deposits. They didn't exist until the moment you swiped that credit card.
That's true, but that's a next level beyond this. So the bank basically, the bank creates brand new bank deposits and pays the vendor, but then you have to pay bank deposits to the bank later. So you're still promising to pay those bank deposits later. And a bank deposit is a promise to pay a bank note. And a banknote or a gold...
It used to be a gold certificate, Yeah,
it used to be a gold certificate, and then it used to be a promise to pay gold. And then the chain of promises is over. Gold is the real money. So if we go back to what the Russian advisor is saying, that the U.S. is trying to get everyone to use stable coins and then is going to devalue the dollar, if you want to try to wrap your head around what that means, you can think of a stable coin as just a different form of layer 4 money. And so a stable coin is basically just a promise to pay bank deposits later. And all these things that are layer 2 and above, they're all just promises. That's all they are. They're all a credit instrument, and the value of it is only as good as the credit worthiness of the issuer. So if the US government didn't have much credit to begin with, and they create a new stable coin, that doesn't increase their credit worthiness at all. They're still not credit worthy, and don't trust it. Get gold, get the thing that doesn't have a counterparty, and then you don't have to worry about all these shenanigans. So it's very simple when you break it down.
As you pointed out when you were running me through this, they had, basically it was partially in 1933, 34, and then in 1970, they removed layer 1. So we've got this incredibly unstable system of nothing but IOUs on top of IOUs. And at the end of the line, it's IOU more IOUs. There is nothing behind any of this. And so whether or not they add stable coins to the top, another piece of level 4. So you'd have buying on credit and stable coins both up there on level 4. It's still built on a pyramid, which is inverted, built on sand.
Exactly. It's not going to survive.
Right.
And sometimes.
The thing is, when they reintroduce a level 1 to make the whole thing stable again, It looks like gold is going to be the thing that gets reintroduced. That's what central banks have. That is what central banks consider a tier one asset. And it's what Trump is talking about and everything else. And it's what Eastern central banks are currently buying, getting ready for this. It all points to level one coming back. And if you're ahead of the transition in this new monetary reset, if you're ahead of it and you've got gold and you've got silver, you're going to make massive gains in absolute purchasing power value.
Absolutely. So sometimes, Mike, we compare fiat currencies to skydivers. They are skydiving without a parachute. And so our meme of the day is about stable coins attached to the US dollar, no parachute, and this guy passed out. It's not pretty. They're just going to smash and hit the ground. It's going to be ugly.
Yeah. We always say that, if people refer to the US dollar index, the dollar went up today. No, it didn't. It went up. It fell less than the other fiat currencies fell that day, but they're all falling compared to gold and silver.
Invest and earn up to $2,000 in bonus silver at GoldSilver.com. It's easy. Step 1. Open any GoldSilver storage account excluding IRAs. Step 2. Purchase your precious metals. Step 3. Get up to $2,000 in bonus silver dropped straight into your vault. Visit GoldSilver.com/free silver to claim your silver.